wait, that's not the graph that I want to see. I want to see that. Where's the? Is that the week graph? That's not the week graph.
That's the daily graph, lad.
I want to see the week, bro. I want to see
Why do you want to see the week?
because I
I mean,
wanna,
I can put the week on if you
I
want.
wanna complain about why are your bars so thick.
Because I'm like mega zoomed in, so are you blind old bat against it?
I got a second. Wait. Where's the first hump? Oh,
This is the same hump. This is it. This is exactly what's gone so mad with the price. That was the first. This was the hump we were supposed to record on yesterday. That was when we were.
I can't see the hump.
So hang on, okay, let me.
Wait, where's the first hump?
So this was where we were recording the 2 days ago. Yeah, where the audio was messed up.
Yeah.
This was yesterday when we were supposed to record and you didn't turn up. And then this is today.
Oh no. Oh no, it's big.
It's very big.
Jesus,
It's
bro.
half the market.
What is this? Okay, well we were memeing on it pretty hard the other day, weren't we?
I mean, we were moving on it pretty hard yesterday, and I would include some clips of it, but the video's got no flipping audio, so.
Oh no. I mean, I guess that's a good thing. We don't look like right idiots. Well, I don't know. I guess your goal today is to tell me whether our arguments from us memeing on it the other session are still valid or not, or
Yeah, I suppose so. I mean, it is an interesting one. The news is moving on this one so quickly at the moment. Like, there's loads
Yeah.
of news articles that come out, but it's just sort of hitting the media. I mean, there's even articles on BBC on this one because it is still a meme in all things. I mean, we'll get into that in a sec, but I think there's a couple of things we just want to address first. Was thank you for the support on the previous video. Like, we did not expect to get the feedback we did on that, all the number of views we had, so massive thanks for that. If you are enjoying the content, hit the subscribe button, and we'll try and post some more of that. Second one is, well, it was supposed to be two things. It's now three things because of the last session. The second one is, this is actually the second time recording this video. We did record it once 2 days ago, but Hanny messed up the audio.
Whoa. Sorry, Ryan messed up the audio.
I just didn't want to listen to you, alright? I had some feedback saying, look, we don't like this Hanny guy anymore. We don't want his audio.
Get rid of him.
So
Get out.
I muted you. Well, not quite. Needs must.
Oh, no.
Yeah, and the third one was we weren't actually even supposed to record this video on GameStop. It was supposed to be on something else, but there was just too much news flying around in there. We couldn't ignore it. And we thought, yo, let's have a discussion about what.
Yeah.
So.
I'm now regretting the fact, or should I be regretting that I didn't invest in GameStop?
I mean, yeah. So this is where we're going to go into there. So I heard about this. I can't even remember where I heard about it now. I think it was you. You popped into a Telegram chat with me, and you were like, "Are you seeing what's going on with the GameStop shit?"
Yeah.
And I was like, "What do you mean?"
Well,
what's going on?
this was the mini hump that you were referring to there.
Yeah. So
I
this
say mini on the day when it happened, it was ginormous. It was like a 250% increase, and I told you about it, and you were like, we were both like, what the fuck is happening? Is it all Reddit? Is it memeing? Is it legit? Is it malicious? I mean, we even went down the route of manipulation of the market. So
I mean, yeah,
I don't.
It still kind of is. I mean, we'll get
Okay.
into it. Nothing's. I think from the assessment we did yesterday, nothing's changed apart from the price has gone up.
Yeah, I mean, like exactly. That first video, we went through the foundations of the company. You can't change the foundations in 3 days about all the stuff that we pointed out and how.
I mean, that's exactly it. So, I mean, while we're on the subject of the foundations, I mean, we'll pretty much let's have a look at it. I mean,
Yeah.
if I pull up some old reports, oh great, I've even lost the point. We're in the reports. This is going to be a shame. But if you, this is the fiscal report for, I believe this is the yearly one. And if you go into the fiscal report and you start looking at the earnings of the company, you'll see here they've been losing money hands over fist. 2019, before Rona, lost 470 million. 2018, well before Rona, lost 673 million. The last time they made a profit was 2017 at a measly 34 million. Just, I mean, in the world of business, that's absolutely nothing to your average investor. Yeah, okay, that's your life. But
Yeah.
but they've been losing money.
If you tell me about these companies, GameStop or Game or maybe a bit of Kex as well, they're going to be the next blockbusters.
Kex?
Kex, sex, whatever it is. I mean, actually, it's sex. It's sex. Kex. That's a C. It's a C.
That makes me think of like get your kegs on, as in like you can keg somebody like you pull the trousers down.
Anyway, CX, they're going to be out. They're going to be out of market. I mean, everybody's moving on to online. We're moving to do I mean, the PS5 is going to digital only, getting rid of the CD slot, the disc slot, and Google Stadia. I mean, they're going to be popping off soon too. So,
That's exactly
I,
it. It's
if
the
you came to me,
digitalisation.
hey, GameStop, and I'm really like, well, what the? I'm not going to be investing in this company. There's no future for it.
Yeah, it's exactly. I mean, there might obviously, if you look at it retroly, then maybe things like vinyl CDs, there is going to be the people that are like, oh, it's better on hard copy. Everything's better on hard copy. Then there will still be a market for that nostalgia thing, but
Yeah,
it's not the multi-billion-dollar market
yeah,
that it once
exactly.
was. If you know
Yeah.
what I mean. And you can see that in the figures here, and you can even see it if you read through some of their later reports going on about, oh well, we're trying to move more into the e-commerce section and get more online and this, that, and the other because of the way it's going, and this whole server hosting of gaming, Stadia, and if I don't know if Amazon have got an equivalent version of it, I suspect they will
Yeah.
do at some point because that's Amazon. Amazon controls the world now, but it's the way it's going to go, and the market is
So,
going to
so,
end up
so,
becoming.
so why is it so why is it blowing up right now?
I mean,
Can,
I was pulling up some of this article's been lost anyway, but I was pulling up some of the articles on it, and basically, effectively, what we were looking at is our stressful bets was leading the charge on this one. So if you
so I can't get my head around this. That speculation alone is enough to complete like not destroy, but make a market so volatile. I don't understand.
it wasn't speculation. So effectively, what somebody spotted that there was low liquidity in the GameStop market, and low liquidity basically means there isn't that many shares on the market. There's not many people buying and selling, which means you
Okay.
don't need that much money to be able to move the price off it. They also noticed that a lot of people were shorting GameStop. Obviously, given the fundamentals we've just been through, your serious hedge fund investors, as you call them, who are short in the market, knowing the company is
Yeah.
going to default and go bankrupt, and therefore the share price is going to follow it. And some clever clogs within inside r/4pjet spotted this and managed to arrange enough people with enough money, effectively, to buy up shares and cause what's called a short squeeze. Now, a short squeeze is where people who have short positions going on and stop losses and liquidation points set in. If their price hits their stop loss or their liquidation price, they effectively have to go and buy shares on the open market to close the short position. And what happens
Okay.
is, as more people go onto the market and buy at market price with the low liquidity, the price climbs up, and therefore more people who have got shorts open default on their position, or their positions get liquidated, and therefore more shares get bought, and it's sort of this compounding effect. So with just a small amount of money, you can shunt the market. Well, I would say like 10, 20, 30%, but in the case of GameStop, it's been nearly 700%.
Yeah. Yeah.
So
Yeah.
I think it's quite
I mean,
interesting.
you say it, man. A lot of people. There's a lot of people, yes, but there's also some rich people on Wall Street bets putting. I mean, there's a YOLO update on the subreddit that comes on every day, and it's
Yeah,
this guy that has tens of millions in GameStop
yeah,
stocks, and just sharing his update and his gains on it.
and
His gains must be enormous right now.
that's exactly it though. But the thing is, this isn't sustainable. It's a pump and dump is effectively what it is. It's a Ponzi scheme. And
Yeah,
if
that's yeah. I think that was my next question to you. If I was a noob, or I have some money, should I be investing in GameStop?
it wouldn't be investing, you'd be gambling/day trading at best.
Yeah.
It's a all right. I'm going to try and catch some of this trend, but at the end of the day, it's people that aren't familiar with this sort of stuff and don't look into it that are going to get hurt by it because
Yeah.
it's not a sustainable, profitable pump. You're not buying into a valuable company, a valuable asset. It is literally just a run the price up, make some quick gains, and then get away with it. I mean, this is quite an interesting video I was watching earlier. I'll leave a link for it in the description. And this guy's effectively saying it's people our age and slightly older that got slammed in the 2008 financial crisis. And basically, the banks went out and bought risky assets and then got bailed out by the government during
Hmm.
the 2008 financial crisis. So they got rewarded for taking risks. Now, obviously, they're not going to go around bailing out your average Joe, but it's effectively young people now have just done exactly the same to hedge fund, and this is what everybody's raving about. This is a Reddit page that has stuck two fingers up to Wall Street and
Oh yeah.
slam their accounts. It's
I
phenomenal.
mean, on the eToro feeds, it's the same thing. It's like take money from the big boys. It's our time now to shine, and it's like get
Exactly
get
that.
your swords and shields ready. Like it's yeah, it's like a rebellion of some sort.
I mean, this particular guy, he made $500,000 off his GameStop
Wow.
trade. He's donated. I've forgotten charity's name before, but you can watch the video there. I'll link it to you later. It's really quite interesting. But yeah, he made a load of it.
So
But
a lot of people on the subreddit are saying hold till 1,000. Is this also idiocy? I mean,
it depends how much of a meme it becomes, really. Because if you get
Okay.
enough people, I mean, you look at the gain this has had. We looked at this 2 days ago, and you had 2.2 million Reddit page followers. It's gained 1 million Reddit page followers in 2 days.
whoa, Jesus.
Exactly.
Okay,
The
that's insane.
The media attention, the FOMO, you're going to have the fear of missing out. People are going to be like, oh yeah, if it's going to get to 1,000, let's get in. They're going to get there. But there's people that are going to get hurt. That's the
Yeah.
thing. I mean, I would try and relate it sort of back to Bitcoin 2017, December 2017, with the price. It was all in the media. Yes, that was FOMO, but Bitcoin's got better fundamentals than GameStop currently has. In all honesty.
Yeah.
And it's eventually what's going to happen is the people that are uninformed are going to get hurt by it, and that's all that first happens. It's a transfer of wealth from the uneducated to the educated.
Yeah, I mean, that's the sad part about it. It is. But I mean, that's the entire fundamental of the market, though. To gain money, somebody else needs to lose money, right?
Yeah, that's exactly it. That is exactly it.
You're competing with everybody.
You're competing against your mates at the end of the day. That's
Yeah.
That's why we're doing this podcast. I'm just trying to rustle you out of your money.
Yeah, exactly. That's why I'm minus 50 from 2 days ago. They're inside your account.
I was going to say, yeah, exactly. Well, quite clearly not, evidently, considering the values that were right before.
Oh, no.
But this was it though, because you see it everywhere. Like you know when it's sort of becoming a bit of a FOMO, a bit of a bubble, because everybody starts talking about it. Yeah, okay, you've got your people that are following it that talk about it.
I want to ask you that. What do people mean when they say it's a bubble? I don't get that.
It's a bubble. Basically means it's overvalued. It means the underlying asset isn't worth the money that it's being traded at.
Okay.
So if you were to look at the market cap of GameStop now, I don't know what it is, maybe I think it's like 60 odd billion or something stupid like that, maybe even worse than that. I don't know. I haven't checked it recently. But effectively, the underlying company is not worth 60 billion. If you look at the amount of assets they have and the amount of revenue they have and the growth they're going to project and everything else like that, it is just not worth it. So it's overvalued, and that basically means it's a bubble. And what do bubbles do? They pop. And the price goes down. So but it was interesting talking about it, because I know I was chatting about it with some of the guys at work, and one of the guys at work was actually in this train a little bit. So one of his mates hit him up a couple of days ago and was like, "Yo, you need to get on this GameStop rocket ship." And he did hop in, and he said he was up like 140 odd % at one point. But he does the classic thing of all of us: is he knows where he's okay to cut his losses. He knows where to set his stop loss and accept sort of like a 10% stop loss or whatever he's going to do. He can accept that. But he's terrible at choosing where the gains are. I mean, we were talking about this last episode, saying we don't got to figure out the point that you've got to take profit. And he was like, yeah, but it could go up another 50%. That you want to hold it, you want to hold it, you want to hold it. So he ended up holding it, and then got caught up in the crash 2 days ago. And then
did he settle in the crash? Did he keep holding?
He hit his stop loss, so he ended up losing 40% of that money.
Shoot.
He then got back in again and then sold out of it without taking enough profit. And he was saying today that he was talking to his mate about it, and the pre-market price is back up at $230. So he was actually going to try and buy back in again and recoup some of the losses he had. Which, if he has done and he has sold out, and I hope he has, then back up at 300 from where it opened earlier today, he should be okay.
Yeah,
but I'll be interested to speak with him tomorrow and see what's going.
I wonder what he's gonna do next. Is he gonna hodl till 1,000, or is he?
Yeah, it'll be the interesting thing, and it's a topic I'll discuss with him. I think tomorrow, and just have a good chat with him. But it was just interesting to see it from the perspective of somebody that actually got on it, because obviously we can sit here and laugh about it and meme about it, and he didn't put much money into it. Like he knew what he was doing. It was more of a, let's see if I can ride this train a little bit. So it wasn't stupid.
To be honest, when we looked at it 2 days ago and we saw that spike, I was thinking, yeah, you know what, it's not a big deal. Like I thought it had came and went. I thought the opportunity is gone.
I'm not gonna lie, I did exactly the same. I looked at it and went, yeah, that was a funny thing, which is why we recorded the video at the time. And then also it's probably a good thing the audio went squiff on that video, because everything all changed, and now it's like 3 times funnier than it was a couple of days ago because the price has tripled. So
jeez, oh my god. Okay,
it's an interesting concept, but I think it's not the first time something like this has happened though. If you look at it, it happened a while back with Hertz. People on Robinhood did exactly the same thing. Hertz gone bankrupt, and then people were making 300% on call options on Hertz because
wow.
because of people online and stuff
Well,
like that.
okay, I don't know if you can answer this question, but what does a situation like this mean for the company? Does the company have hold on the money that they're getting? I don't understand.
No, no, not really. So companies, what happens is that somebody creates a company.
Yeah.
They'll raise funding through issuance of shares if they're doing a public company. But what they'll do
Hmm.
is they'll issue shares as non-tradable shares to start with. So, for example, I've bought shares in Monzo. I own shares in Monzo, but I can't sell them to anybody because they're seed. They're classed as seed shares.
Okay.
And that's a way for them just to gather funds and say, I need 10 million. I'm going to issue 1 million shares at 10 quid each.
Hmm.
They'll get the money from it. And effectively, what happened is that the people that created the company, that originally developed the company, will have a portion of those shares as well. So they sell a stake in their company. Then what happens is when the company goes public, they release shares onto the market to be able to be sold. And generally, what that is that your core people that originally developed the company have taken the company either as far as they're willing to go or as far as they believe they can see it going, and they want to get some money in their bank. And they go, right, I'm sort of finishing with the business. I want to get some money in my pockets to secure some profit for all the extra 10 years of work put in, working 100 hours a day to try
Yeah.
and build the company up.
Okay.
And then they go into there. So if the people, the core owners of GameStop, will be profiting from this, but the company itself won't see anything from this at all. It's not like you go buy
Okay.
shares and then GameStop suddenly get your 100
Yeah, I
quid.
mean, I was thinking, am I going to see a new GameStop down the road? I don't know what
No,
was happening.
no. Yeah, so no, it's exactly not that. So it's more of a case of I held GameStop shares and then I've sold them directly to you, so you've just taken my portion of the company that I owned. The
Okay.
company
Yeah.
doesn't see anything of it. Yeah, okay, you could class yourself as an investor, as being an owner of the company, so technically you as the owner of the company have profited, but the raw company itself won't see anything from it. And more than likely, looking at the numbers there, I wouldn't be surprised if GameStop does completely go bust and out of business. In which case, this will go straight back down to zero when it gets delisted.
Yeah.
So don't want to be the guy that bought at $340 and then ends up with nothing.
So, I mean, so can we say it's too late to get in, or
You don't know. It's there's a classic saying. I keep coming up to my classic sayings, and I need to start quoting where I actually get them from. But there's a classic saying: "Is the market can remain irrational longer than you can remain liquid," which basically means the market can keep doing what you don't expect it to do longer than you can keep money in the market, effectively.
okay? Yeah.
So if you keep thinking, "Oh, the price is going to come down further," the price will go up 1,000%, and you would have missed out. It's that sort of thing. I wouldn't touch this with a barge pole. It's a pump and dump. Thing is, the interesting thing about this is if this was a hedge fund manager doing it, you'd have one person you could probably pin to it, and the CFTC or the SEC would come after him and say
Yeah.
it's a Ponzi scheme. That's against market rules. It's against trading rules. Sorry, Sonny, you're going to prison for 15 years, and by the way, here's $100 million fine. Whereas
Yeah.
because it's was
So many
2.2 now 3.2 million Reddit users, they're not going to go and right give us a list of all the Reddit users and we're going to trial every single one of them and let's get the courthouse lit up and a queue as long as Manhattan down the outside of it. It just wouldn't happen. Like, so it's
To be
an
honest,
interesting one.
when you told me that they gave 1 million, I did not know. That's insane. Like Wall Street Bets is a pretty old subreddit. It's
Yeah,
one
I
of the big
only
ones.
spotted that earlier today, and I was just looking at it. I was like, that is mental.
That's crazy. That is crazy.
But that's exactly it's the same. That's exactly what FOMO is. It's everybody onboarding.
Well, yeah,
Everybody
I mean,
talking about everybody getting
I,
into it.
I saw on the eToro feeds that people were saying it's now getting, commercial recognition and investors outside of the bubble are putting money into it.
Yeah.
Well,
There
a bit
was
funny.
Yeah, there was some interesting articles I was looking at. So there was an article I didn't manage to read it in full just yet, but they were basically saying that companies like BlackRock and Goldman Sachs and J.P. Morgan and all these big investment bankers are now actually having to set up divisions to monitor r/Wall Street Bets to see if it's gonna slam their portfolios because
Shoot.
they're
Okay.
affected. They're the ones that have lost out on this most because they would have been shorting GameStop like no tomorrow, and they are the ones that have been slammed by this. So then I think it's amusing that your Mimi Reddit page has now got your big guys in suits looking at going,
Yeah.
oh god, these guys are doing it. And it's
We
just
need
been
to
the
be
trend
careful.
for 2021. Bitcoin's been slapping it to your bankers. Your Robin Hood and Wall Street Bets investors have been slapping it to your hedge funds managers. It's just it's a weird time to be alive. It's not the way it's supposed to go, but then again, it's supposed to show us the power of the internet, doesn't it? Get enough
Yeah.
people together on the internet, and you can change the world, sort of thing. doesn't know how big
It's crazy.
hedge fund
It's
bank.
crazy.
Right. Well, I suppose you want to do a quick portfolio update, unless there's anything else you want to go through there.
Yeah, sure.
I bet you're wishing we'd done this a couple of days ago.
Definitely. I am. Things are looking a bit. Quickly switch to my screen because Tesla's about to go red, and I want people to see one green on my portfolio.
Hang on, we'll get there. Hang on. Let me figure out how to do this.
Oh no! It went red. No.
Green.
Oh no, it's back to green. Okay. Well, yeah. Things are well. When we did the failed recording 2 days ago, I was looking a lot. I was getting gassed.
It wasn't a fail. It was a learning exercise.
It was your fault, right?
It's default audio. I was like, that's default audio.
Nah, it's fine. It's fine. We all make mistakes. What's important is that we learn from them.
Big cray.
But yeah, I mean, 2 days ago, half of it was green. Now it's mostly red.
What they all say.
No, it's true. But again, it's one. The market is red. I mean, everybody is losing money right now, or most people are. But also Bitcoin. I've got a lot in that, and that's looking a bit red right now too. So
yeah, Bitcoin's carrying on.
Bitcoin it's gonna get a lot. Well, from what the trend lines are saying, it's getting a lot more red anyway.
Yeah,
it's going to be more red, which is great. I mean, I'm kind of excited for it. I want to get more money into it, and I don't want to keep buying at 30K.
Yeah, I mean, you were saying because you put some more money into your portfolio the other day, didn't you? So you've got a bit of money sitting on the sidelines to hopefully buy into it. So it's not necessarily a bad thing. I've still got confidence in the rally at the moment, in all honesty.
So you still confident that it's going to get to 100K in the next couple of months?
Not the next couple of months, but next 12 to 18. Yeah, I would have thought so. And then you'll start seeing a major correction back down to maybe the levels we're looking at now. But there's still, if you look at the fundamentals behind it at the moment, there's still massive investment banks still buying in vast amounts. Grayscale still buying in. I mean, they were back buying 16,000 Bitcoin a day when we're only mining 900. So it's just a bit of people taking profit, because at the moment absolutely everybody apart from the people that bought up near 42k Hanny are in profit.
Hey, it was a small amount.
Yeah, exactly. So they're all in profit, so it's right, we'll take a bit of profit now and we'll buy in maybe a little bit lower, and it's just having a bit of a flex out. And as far as I see it, this is entirely healthy at the moment. I'm fairly comfortable with it.
Yeah, I mean, yeah, for me, my game plan is at least for the next halving cycle. So I'm in for a more long termish. I'm not gonna sell at 100K at all, because I mean I didn't buy in low enough for me to make that much profit from that target.
Yeah, but even still, if you're up 200, if you get to the stage where you are up to 300%, then maybe take a little bit of profit where you can. As we've discussed before, I'm never going to fully sell out mine, but I'll be definitely taking profit at some point. So
that's true. So yeah, I'm going to take the opportunity when hopefully it comes down to 20K. I know it sounds weird that I'm saying that, but I don't know. It came down to around 29K today, and I was very tempted to put some money in, but I was like, have faith in the lines that I've drawn. and buy when it goes a bit lower. So I'm gonna wait. I still have $100 assigned that I want to put on Bitcoin, so I'm waiting until it crashes a little bit more before I start buying in there. Then yes, so 2 days ago the copiers were doing great. They were both up 2%, and they were both making around $20 for me, and now it's not doing too well.
It's almost exactly the same as the first episode. We were looking at it. It was like, if we recorded this 2 days ago, it would have looked so much better.
You have it out for me, bro. You're trying to make it look like I'm just constantly.
No, it's the same with mine. I mean, look, you look at mine. I'm down like nearly $7,000 since last episode. It's like, oh right, okay.
But yeah, we can look past that. I did do actually. I want to show you. I did do a really good play. With Disney. So I drew some more lines.
Man with his lines. I like it. Nice.
I drew some more lines and I noticed there was a triangle. I was like, whoa! I remember Ryan said there's something to do with triangles. A breakout's about to occur. So I put in $50. I wanted to spend $150 on Disney. I put in $50 before the breakout. Then the breakout happened, and then I bought $100 more at the bottom over here. I don't know if maybe I should have. I know there's like some like lines that you can draw from here to here to predict how much is going to break out. Yeah, so
generally that your price spike that leads at the start of your triangle generally stipulates the rough size of the breakout. So
Okay.
your line's probably a little bit big there, but if you were to measure the size of the gain between the bottom of your trend line to the top price peak, sort of middle of the range,
Yeah.
you'd probably find it's fairly equivalent in percentage value.
Yeah. Yeah.
But that's not necessarily a bad thing. I wouldn't necessarily have put that 50 in at the bottom of the trend because obviously being a descending triangle, it's more likely to break to the downside. But the $100 further down was definitely a smarter play. You just got to be careful here. When you're doing that sort of thing, look for historic support levels. So look back in the price chart
Okay.
and look where there was high trading volume between particular ranges. So if it's been trading at like $100 and it's had like hundreds of days where it's been trading at $100, that's going to be some really strong support. So it's going to take a while for people psychologically to break that $100 barrier if at all.
Yeah.
So that sort of range is a good sort of price to buy. You put your buys just slightly above that support just in case, and then it's a good place to try and catch it from.
That's a good point. Yeah, I'll look into that. I'm noticing. I mean, you see these support, especially with the Bitcoin. There's like this support right now, which is at 30K, and it keeps testing it, and it keeps bouncing back up. Or
And that's exactly it. And it
usually
will
bounce
do
back up.
It will do
Yeah.
that.
So it's more of a psychological thing. People not wanting to buy or sell it around this price.
So 30K is an interesting one because 30K it's a big round number. It's a psychological barrier more than anything. That's what people put in it. Same with, funny enough, back in the day, $9,000 used to be the big psychological barrier because of the Vegeta meme. It's over 9,000, and that was it. And it was a constant meme that it'd go over 9,000. Everybody'd post there, well, hey, it's over 9,000 memes, and then it'd crash back down, and then you'd get all the sad Vegeta memes, and it went on like that for months. Absolutely months. And then eventually, when it actually broke above 9,000 officially and stayed above 9,000, no Vegeta memes because everybody was bored of it by that point. But that's the point everybody's got used to seeing 9,000 variants. Yeah, but same as 20K. 20K is a big round psychological number. I mean, I know we might do an episode on, I think there's something called Fibonacci retracement.
Yeah, I do want to actually learn about that.
So we'll have a look at that in an episode, and it's an interesting one, and it does sometimes, quite often, it does ring true. Now, whether that's just because of market psychology and everybody thinks it's going to get to that price range, therefore it will get to that price range, or whether there is fundamentals in it, it's an interesting topic of conversation.
Sometimes I ask myself, even when I see these YouTubers using these tools, that when they draw these when they put these shapes on the graph, sometimes is it that they just want to see that these points are there?
Yeah, in some cases.
It's like you draw a line and then you've got these intersections and you're like, oh, it intersects at this point and that point. It's like it's a line that's going through other lines. Like it's going to intersect at some point.
And it's a line you can draw it however you want. There's no definition on how you draw a trend line or anything. Well, apart from with obviously the moving averages and stuff like that, which are mathematically calculated and sometimes straight off. When you're drawing trend lines and triangles and stuff like that, you can draw them however you want. You can make it say whatever you want. there is a bit of leeway in it all. I mean, what other moves have you been making then?
So I'm trying to bust into the travel industry with Rolls-Royce and EasyJet. Rolls-Royce I'm not so confident with. EasyJet a bit more so. So yeah, I mean, it's more of a buy at this terrible time of COVID when the planes and the aircraft industry is not doing too well. And then hopefully when the vaccine is all good, Gucci, EasyJet will be flying again.
Yeah, I think we were going to do a point earlier where we'll sit down session and have a look through the travel industry, because the main thing we need to do is, again, same as we looked at GameStop fundamentals, we'll do these in a lot more detail as we're actually probably going to buy something in them.
Yeah, I mean, when you mentioned that there is this like simplified financial summary on eToro, and it does show you total revenue and net income.
Yeah, exactly.
So it gives you a rough estimate. And you can see here in 2020 they made half the money they made in 2019, and they lost $1 billion.
And that's exactly it. But this sort of market's going to rebound back. All you hear off anybody whenever you go anywhere is, I want to go on holiday, I want to go on holiday, I want to go on holiday. So as soon as this whole pandemic is over, I mean, it's not going to be sort of an instant stop. There will be a fade out, but there will be a massive spike in the travel industry. And if they're capable of getting back to the flight volumes they were at before, because obviously you can't just switch everything back on, these things move slowly, then they stand to make or catch back up on a lot of the money they make. So as long as their fundamentals are fine now and they've got enough cash in the bank and enough liquidity, they'll be all right. So there's definitely profit to be made there. It's just making sure you pick the winners that are going to survive it.
Yeah, and that's why I say I'm like for me, like EasyJet is dear to my heart. I mean, I love flying to Italy for 30 to 20 pounds. So, so they've helped me out a lot. My traveling aspirations. So yeah, I mean, picking them, Rolls Royce I mean, they've been losing money a lot. I might regret actually buying into this one. They haven't been doing too well even before.
Yeah, I wish you'd spoke to me about this one before. I mean, did you read that news article I sent you earlier? I mean, I know you can't always base everything off the news, but effectively they turn around and says we're going to burn twice as much cash as we expected in 2021. So they predicted they were going to get through million pounds in cash reserves, a billion, not a million. Millions nothing to these companies, but they predicted they were going to get through £1 billion in cash reserves in 2021, and now they've doubled it to 2 billion. They reckon they're going to end up burning because the pandemic going on longer than expected, which is obviously, I suspect, has hit the share price. Well, I think,
yeah, it's definitely it's pretty bad right now.
Yeah, it's on the daily, so that's a bit of a rough one. But yeah. I mean, before you do any more in that, let's have a gander at some fundamentals.
Definitely. I mean, I think anyway. I'm not. Yeah, I'm not gonna put any more. I think I put 50 just to get my foot in the door. It's super cheap, and then I looked at the difference, and I was thinking, if it is gonna come back,
yeah, it may be cheap, but is it valuable? That's the thing. Is it still worth that price that you're paying at the moment? Yeah, okay. Once upon a time, it might have been worth 10 times as much, but the company was probably worth 10 times as much. Is it still worth that now, or does it have the potential to get back there? Is the main thing. And I think in the long run, you'll probably be alright with those. You just got to get ready for some red bars for a farewell to come.
Oh yeah, for sure. And that's why I think I wanted to put also another $150 in EasyJet, but when I got kind of scammed by the pre-market. Because I think what the fudge? Yeah, I kind of I think I made my decision. I wanted to put money in EasyJet on the weekend, and then while the market was closed, and at the time it was like 780, and as soon as the market opened, it was 720. So I was already at a minus whatever it was 5.
How did you set your buy order? Oh, did you set your buy order on the weekend?
Yeah.
So what will effectively happen if you set it as a limit order? It will take the best price it can find when the market opens.
So how does the market move when it's closed?
So you do have what's called pre and post market trading in especially in the States. You have a lot of that, which is effectively where your big institutions have got a little bit of extra back change to pocket, and the big boys get invited to do trades outside of markets for a couple of hours before and afterwards. So
that's not fair.
Yeah, I know it's a thing. And again, that's probably going to be another topic for another episode. Like we can keep.
Yeah, so I mean that's why I was like, it was like I put it in, and then I woke up the next morning at 9 a.m. I was like, oh, let me see how my EasyJet money is doing. Oh, I'm minus 8%. That's not too great.
Yeah, that's exactly it. Whereas people like your market shares, effectively what happens if you set a limit order at 780 and the market opens, you're trying to buy at a price far higher than the market value is. So what it will effectively do is take the person that's selling at the highest value and fill it with their price, so they get the best deal and you get the best deal effectively. And then that price is then what gets printed at the graph, because that was the last trade price effectively.
So yeah, I mean, like I said, I drew the graph. I knew the breakout was going to happen anyway. I did not expect it to be so severe from straight out of the open. But yeah, I still got $100 left to invest. So I'm going to look at how this graph is looking at the moment, decide whether it's at the bottom of the crash or not, and then invest some more.
Yeah, we'll see. Maybe we don't do easy. I mean, you're quite heavily in risk assets at the moment. I know you've got your more security and you're following things. I understand that, but obviously,
so yeah,
Bitcoin is a growth thing. Tesla growth thing. Disney's okay. Disney's a good shout, especially with their new streaming service coming online. I think that's brilliant. Coca-Cola's pretty safe. That's all right. Rolls-Royce and EasyJet trying to catch a falling knife. So they're
exactly. Yeah.
XRP we don't talk about.
I'm so sad. It's like a daunting mistake that looms over me every minute of the day. It is what it is. It's fine.
Yeah, but we'll do a little thing, and maybe next week we'll see where that extra $100 went, or maybe even do a bit in the week and say, right, well, this is what we're going to look at. Here's where you should put it. Or
I think
consider
maybe
putting.
that might be cool. Yeah, if we maybe we say maybe there's an episode where we're like, where should Hani put his $100?
I mean, it might be a good thing anyway because I'm at the point now where I'll be putting my next 1,200 in, and I'll be doing exactly the same thing, doing a bit of research
Yeah.
and going right. Where should I put my stuff? Right. Shall we have a look at my massive losses this week? Spicy losses.
Man, I'm so upset. 69. The 69 meme is dead.
69 down to 62. I mean, if you remove the 2, it's 629.
Yeah, I guess.
So, obviously, my portfolio shunts a massive amount of Bitcoin given how leveraged I am with it just because of the gains in it. So I'm effectively $7,000 down since we last recorded. Yay! It doesn't faze me too much. I'm pretty relaxed with it. Yeah, other than that, most of the stocks have been performing pretty much as I expect them. A couple of moves in. The main one I did, I can't remember if I'd done that last episode, but I bought some Phoenix shares that were going in from there. And one thing I didn't do in our previous recording, which I want to start doing, is just sort of going through dividend tracking. So far in January, I've had 2 lots of dividends. GlaxoSmithKline have paid me out 24 quid, and Realty Income Corp, they're a retail conglomerate. There's a lot of retail shops and then rent them out to places like Target over in the States. They pay me on a monthly, so those pay me $260. Awesome. What you'll notice with this as well is that where I'm being paid dividends, you get hardly anything in the gaps between, but when the quarterly dividend payment comes out, you suddenly get these massive spikes. So you end up with a chart that effectively looks like, oh, you haven't been paid much, you haven't been paid much. Yeah, here's 200 quid. You haven't been paid much. Oh, here's 300 quid. So where I'm predicting I'm going to get, well, at the moment, 13.59 in dividends this year. Obviously, that'll go up as I put more money in. Then you get these sort of massive spikes where most of that's actually done in 4 months of the year. So it's an interesting one. But yeah, I've changed my strategy now to increase the amount I'm putting in monthly from 1,000 to 1,200 because the extra money I was just putting into a bank account. I've got my emergency fund. I've got enough money to move into my first property when I want to do that. So it's kind of like, well, I can continue putting in a bank account and earning 0.7% interest, or let's throw it at GameStop shares.
Oh no! Don't do it.
I don't think I'd do that. But yeah, otherwise, I don't think there's massive amounts really to update with mine. It's
no. I'm interested in the dividend shopping. I mean, that's part of the reason why I put in Rolls-Royce, EasyJet, and Disney is because their dividend, they pay out dividends. Not like the other ones that I've invested in. So yeah, it would be good to see how your dividend shopping is going.
Yeah, that's exactly it. I mean, what's the dividend rate on Disney at the moment?
It's pretty.
I think it's 2.something%. But that we were chatting about that last episode. Well, last recording.
Oh, no.
We were saying that the dividend percentage may be low, but the growth potential's there, and the share price is inflated because of that growth potential. So once they start paying out the royalties from Disney Plus, all of a sudden, then you'll see that dividend rate hopefully go up. So
yeah, it's only at 1% right now.
Oof, big boy.
But I thought it was at 2%, but it's fine. I mean, as you say, it's a good growth investment. Plus, it gives a bit of dividend, so it was like a small win.
It's not the end of the world. I mean, I aim for 4%. Is sort of an average portfolio is what I try and go for.
Mm-hmm. So EasyJet is saying that it's paying out 8%. What do I take from that? Because they're not going to be paying out, are they?
Given what's going on, I don't think they'll do. They'll cut their dividends. So I cut 8%'s not terrible. I mean, a classic example. The best one I can do from here is there's a company on here called New River Residential that I brought into. And what New River Residential do is they're basically the same as Realty Income Corp in the UK. They buy up shopping precincts, malls, and stuff like that, and then they let out the units. And nice. When I bought them, it was saying, our dividend percentage is going to be 35%. I think is what it said. And it's like, oh, great, yeah,
35%.
But that's because the share price is tanked, knowing that people were knowing that, right, okay, the shops aren't open, there's going to be issues with paying rent, they're probably not going to pay dividends, they're going to be conserving cash, and of course, yeah, they went through and cut the dividend. But I looked at it, and I looked at the fundamentals, and I looked at how much cash they had in the balance sheet, and I looked at how much debt they had, and I thought, well, survive this, they'll be all right. So when they were on sale for like 30 pence a share, I was like, right, I'm going to buy in a load of these. And it's worked out because their cash balance has remained positive. They've survived pretty well. They've had 80% of their people still paying their rent even through the pandemic because they've got good, diverse portfolio of property. And eventually they should start repaying a dividend again. Yes, it won't be the same level of where it was, but even if it's half of what it was, I'd still be getting an 18% dividend, which is ridiculous. So I'm pretty.
So I mean, the 8% that I see in EasyJet, do I even consider it? I mean, what can I expect? They could change it to just 2%.
8% is very high. 8% is very high, and it normally means there's something wrong with the company where the share price has come down. Obviously, we know why that is.
Yeah.
And therefore they're likely to cut the dividend or bring it down from there. And what you have to remember is the same with all the market data, all the trends you look at and everything. It's all backwards looking. It's all historic data. So it's looking back at how much dividends they've paid previously compared to the current share price, and obviously that won't be the same. I wouldn't be surprised. I haven't looked directly into EasyJet's dividends yet, but I suspect they probably will cut it completely, and it will be a couple of years before it comes back up again. But if you're getting decent growth of it because you bought near the bottom and the company survives, as we've mentioned, then your gains will outweigh that to start with, and when they do start paying a dividend back, then happy days. So,
happy days.
Happy days indeed. Right.
Cool.
I think that'll do us. Again,
Thank
you very much for the support on the last one. Didn't expect it. It was really, really good. If you're enjoying it, that way. There we go. Down there.
Sub.
And adios, amigos. Bye.
Bye bye.